Hello from Camden City. We're lucky to be invited by John Spindler to a very beautiful place and asking him a couple of questions about the startup ecosystem in London and how investors sees this whole environment. John is CEO of Capital Enterprise, which is organization which helps or supports startups here in London, gets together few stakeholders such as universities, incubators, accelerators and others. And he's also active angel investor and one of the founders of London Co-Investment Fund, among others. So is there something else you would like to add to this short introduction?
I'm also an ex-entrepreneur. I've done it 2 or 3 times, once reasonably successfully, once disastrously. So I have both sides of that as well to share with the startups we see.
So my first question, as we are in London and we came to get some insight into this ecosystem, is why do you think this is good city to live and good city to start your own startup?
Well, London has some big advantages if you're European in particular. It's the largest mega city in Europe, in Western Europe. 9 million people live in this city. There are 4 million people come into it every day to work. It's the only real mega city, which means virtually every type of business is basically based in London. It's the largest single market. Whether you're doing food delivery, whether you're doing B2B with finance, media, creative sector, whatever, London is Europe's largest single city market. 2, it's English speaking. And I know obviously most of Europe has got the second language is English, but kind of believe it or not, everyone in London speaks English. And that's quite important because most people want to scale in an English speaking environment. Thirdly, it's the biggest source of talent. It doesn't mean that talent's very cheap, but it basically means that every year about 1 million people, including about 200,000 techies, come to London looking for work. So yes, you have to pay for it, but you can get techies, and you can find salespeople, and you can find heads of product, and you can find marketing people, all the kind of people you need to kind of get your business going. And finally, it's expensive. It's got more expensive, but it's still pretty cool. You know, it's the youngest population city of a size in Europe. The average age is only 31. If you're in your 20s, you are the majority of the people you will see, as you probably experience in your few days here. Today we're in Camden. This is one of the startup kind of villages. Kind of Camden is particularly great for the creative sector. So you've got Shoreditch, you've got the city where you've got fintech going on. So you've got different kind of subgroups as well, which in any other city will be the centre of their tech scene. And this space, for instance, has about 400 to 500 startups in it.
So let's suppose I am the founder of a new company and I would like to start my activities in London and I'm thinking about fundraising. So what would be your advice and how and where meet angel investors?
Well, I mean, first of all, if you're going from Europe, you need to incorporate. Luckily for you, it's probably the easiest country in Europe to incorporate your business. As soon as you've incorporated your business in the UK, you are able to then access some of the funding available, particularly the tax breaks for investors that encourage them to invest in your company. So anyone who is basically thinking about coming to this should go on Google and basically put in the words Seed Enterprise Investment Scheme and basically read all the entries about this great tax scheme that gives basically an investor who puts a pound or euro in your business effectively 50% back from the British taxman. So that scheme encourages people to invest. There are other things that you can get when you're here as well. But most importantly, I think what you'll see when you come in here, you're in a culture where there are other startups all trying to do amazing things but are not afraid of failure. This is not a contractor culture. This is a startup entrepreneur culture. And I think that's the reason why entrepreneurship increasingly is clustered in smaller and smaller number of cities, is to find like-minded people prepared to take the risk to build a great business and not to feel foolish and not to get pressurized by your parents or your friends, etc., to give it all up just to go and get yourself a job or get yourself a contract. So that's why I would say, if you're in Europe, come here. And the money's an added extra, if you can get it.
And still, if you are thinking about fundraising, what are maybe some tips on approaching investors?
Well, the most important thing is try not to go for investment until you have basically achieved something. I would say the first thing to do is build out your team. 2 is build an MVP. Try and sell that or get someone to use it. Prove that the team basically knows what it's doing. And then prove that you understand the space you're trying to disrupt. Funding in London, like in most places, is about the stage your business at, what you've proven, the quality of the team, etc. My first piece of advice is don't come here if you haven't already got a team and you already haven't built the product and basically worked out who the customers are.
And then I understand how it works with this, like building your team, being ready for the new market. But you get to the stage that you want to
investment, and that's true. I mean, you've got 4 rounds of funding available potentially in London at the early stage. You have pre-seed, anything up to really in the UK because of the Seed Enterprise Investment Scheme, anything up to €200,000, and you raise that from angels and angel funds and family and friends. The average amount for a British or a European company will raise in London is about 70 to 80,000 euros. It's enough for the team to start building out the product, to beta test it, to basically get other people to kind of notice them. And then you go out again for a proper seed round. And there's 2 types of seed. There's the early stage seed, so that's enough for a team to run on a runway between 6 to 10. And what a lot of people do in who are here, about 40% of all the teams that raise money in London will have the founders are from Europe or the rest of the world. About 60% are British. Of that 40%, they have an advantage because normally they have a lot of the team, especially the tech team, back in their host country, where it's a lot cheaper to basically build the product out. But as you know, you're all going to follow hopefully the lean startup methodology, and you're going to need to beat it with real life customers. We only know one thing about your early product, and then we know it's not right. It will get better, and you need to kind of get that kind of moving. Super seed, and we get another group of people come to us, basically at the super seed level. My big advice, if you are now in, I don't know, Estonia, France, Serbia, would be if you come into London, try and get on initially on an accelerator. We have Techstars, we have Seed Camp, we have Startup Boot Camp, we have a host of corporate-backed accelerators from Wayra and Microsoft and DPD and Cognicity and Intel and Dell. We have more accelerators working in this city than probably definitely anywhere in Europe, possibly more than even Silicon Valley. And that's a great place to embed yourself and start to get contacts and connections. And then go for your larger seed round. The larger the seed round, the more Series A, the more you have to prove. My advice on getting to angels is to come to network events, basically speak to other startups, get to understand where they're going, basically come and find people like me who will point you in directions. But this is not California, and this is not New York. Yes, in the land of the blind, the one-eyed monster is king, but London basically funds roughly around 700 companies a year. New York funds about 1,500, Silicon Valley about 10,000. So you know it's better than virtually anywhere else in Europe, but it's still not the Valley.
And then if we can put it into some perspective, how long do you think it can take to close those 4?
Each round is different. You know, the Series A, for instance, one we didn't talk about, is very much a later round. If the standard is to give yourself 3 months each round, kind of, and keep on building. Kind of, this is the problem in London. Is that time and the cost while you're living here can seem kind of difficult, and people probably live in worse conditions in London to do their startup than they will in Berlin, or in Paris, or in basically Sofia or Tel Aviv. You're going to be crammed into small flats, probably damp, but luckily everyone else is in the same position, kind of working 16, 17 hours in a wonderful climate, kind of like to kind of try and get your startup to a position where you have more proof points.
let's suppose we went through this accelerator. We prepared some good conditions. We prepared good company. We did some network, and it's time to present your pitch deck. What do you think are the essential part of every pitch deck?
Understand the purpose is this. It's virtually no one in London is going to invest in you because you pitch. It doesn't work like that. There isn't, people don't go to events and the theatre of it and they pitch and they get money. It's demo days at accelerators. They are just there to raise a bit of awareness. The purpose of a pitch demo is to get a sit down. And the whole thing for you is to do a pitch deck that will get you a sit down. And that's a pitch deck that has to be read. We receive around 40 to 50 pitch decks per week. My team and myself basically spend about 5-10 minutes reading your pitch, and we need to do some basic DD. Because our big time frame is whether I go from reading that to giving you a meeting. That's about an hour, maybe longer. I'm going to do some more DD. That's another 2-3 hours. So I look at it, I can take maybe 5, maybe 10 meetings per week out of the 40 that will come through. So what am I looking for? First of all, what I will check out is the team. Credibility, capability. Credibility, what have you done before? Who's backed you? Who's joined your team? Who have you convinced to come on board? And capability, what have you done to date? The more it's just a theoretical idea up there, the less interested I will be. The more you've actually done stuff, whether you've hired great people, got people to do a pilot review, sold vaporware, kind of built an MVP that at least works a bit, that's all in your credit. 2, I'm going to look at your space, and I want to know what your point of view is of why you think there's an opportunity now in that space, why your target customers are not presently solving that problem, why the incumbents are incompetent, and why there's some trend that's going on that basically gives an opportunity for a new kind of player such as yourself. I want you to always assume there's at least 3 or 4 other teams I've seen in your space, and you've got to come across it. You've got something you've discovered which is better. I think the Peter Thiel kind of quote, which is, there's as many good startups as there are secrets that haven't been discovered. So work out what that secret is. And then basically it depends on the stage. If you come to me on that and you're pitching basically for a small amount of money, or if you're an amazing team, you've been pitching for a larger money, I'm going to go on faith. Do I believe you? Do I believe your hypothesis? And some people will get funded like that. Fortunately, not that many. You maybe have to have a team with ex-Facebook CEOs and exited entrepreneurs, etc. But some teams will get funded on that basically pitch. Most of us are not there. Most of us don't have that credentials. So most of us are going to have to get to what we call product market fit. And product market fit, in my view, is 3 simple things. Does your product work? Does it deliver on the performance gain you are promising? Is it faster than the alternatives? Is it quicker? Is it easier to use? Is it cheaper? Is it more impactful? And what I will do, and our team of DD, will look at your product and try and basically be a user and see, is it any of those? Okay. Most people, quite frankly, fail on that. And I don't mind if they don't fail on it, but they should know why. Secondly is we look at your metrics. We look at basically, do you create value for your customers? And that really is the results of your pilots and your early stage customers. Do they love your product? If I took it away from them, would they cry? And then the third thing we look at is, can you capture that value you create for the customer? I.e., can you make money? And if you can't make any money, then when would you? What do you need to do for that to happen? And that is what most seed rounds are about. You've got about 20, 30, 40, 50% of the product market fit is to basically complete the rest. And that's why you need different amounts. Sometimes it's a lot longer. Most of that seed or super seed is between something like 250 and 1 million or 1.5 million. So on that basis, pounds, or kind of €500,000 to €1 million, somewhere around that area. And that will be led by angels and a micro VC. Mixtures in most cases. A Series A is about you've done that, you've got a great team, you've got a great position, and then you are going to scale. And then it's all about how quickly you can scale and how quickly you can build moats which defend your market position. And and if you're going to basically raise a Series A and you want to pitch to a major VC, most of them are here in London.
So where are those the key metrics you would be focusing on when assessing a perspective, or is there anything else like growth, revenues?
The key depends what you're doing. If you're doing B2B, you're selling to businesses. One metric I expect is money. If you're doing B2C, maybe slightly later. But yes, I mean the standard metrics, the key ones, you can go through your funnel and then the conversion. You all know your pirate funnel. You all know kind of basic, more sophisticated versions of that. The mixed panel, 31 metrics you can measure. It's an early stage startup. The key thing for you to pitch is what you think is the essential one that will grow the company. When you get to going for a Series A becomes kind of much more basically about the business case and the numbers. We jokingly say it's sex with spreadsheets. It's the first time that you're going to need to do lots of extensive spreadsheets and really detail the model. And there are some rules of thumb which basically help you at a Series A. Going earlier, it's about really a focus on the team and what they can do. And how quickly they can get to a position where they have basically a customer and a product basically working well and a business model that can potentially be scaled.
And once you create some relationship, the founder, investor, there's some sympathy. Sometimes it happens that the valuation seems to be unrealistic on both sides. How to make it?
If you want a high valuation, you're going to basically spend a lot of time. Every investor is a value investor. Every investor wants to get a bargain. Kind of just like you when you go to the shops. If you know it's 25% cheaper than you think it was valued, you're probably more likely to want to buy it. For an investor, there's some rules of thumb to kind of think about to get you on there. Every round, basically, the amount of money you're going to do is going to be about 3 or 4 times the valuation. So every round, you're giving away 20 to 25% pre-money of the company. That's a rule of thumb. If you want more, you're going to have to kind of prove more. 2 is basically for an angel, for a business angel, when you spent that runway, they expect the valuation to be 3 times higher. For a VC, 5 times higher. So if you come to me and say I'm raising 300,000 euros at say, I don't know, a 1.2 million euros valuation, I want you as an angel to tell me once you spent my money, you are now proven a 3.6 million euro valuation, and I want to know why. What the metrics are that say you are that. What the comparables are that says you are that. At this stage, it's not what your value now is, what you will achieve, or what you'll be valued at the next stage.
So you have to prove where you go and how you get there.
Exactly.
Okay. In the US, if I talk a bit about the Silicon Valley and the mood there, I would call it, they say that maybe winter is coming, and it means that there might be investment bubble.
It is. It's definitely. It's everything is here. Everything's gone down. I mean, there's been a 20 to 25% correction in London, kind of this year already, from the last summer. So already the valuations are coming down. So that basically means you need to monetize earlier. You need to hold your money cleverer. You need to spend it wisely. You need to be kind of seeing how you can basically use that to achieve the proof points.
And you as an investor, what would be your moves next 2 years? Are you getting the bag, or will you start invest, or how will you deal with the situation?
I think for the seed, we're a seed stage investor in our fund. Our key kind of thing is what's happened to the Series A market. If you looked at the European Series A's, they've been static in terms of growth now for 2-3 years. So that's a problem. There is a Series A crunch across Europe, and London is no different from that. Many companies, therefore, are having to see how they can get to the States, I think increasingly people will look at the Far East as well, although that may have a correction because of what's happening in China now. I would just say to you that the kind of glory days where you could spend and wait 2-3 years to wait for what would be your monetization is probably over.
Mm-hmm.
You need to think about how to make money earlier.
Mm-hmm.
And that will change. It's going to change the business model, change the type of businesses that will get funded.
Mm-hmm. And some of the VC's funds are like collect money from more investors, and they do plans ahead 4 years, 5 years, and so the money are probably collected now. Do the representatives of the funds have to invest all the money, or what will be
the standard route of a VC is you basically raise a fund for 10 years. You have a commitment period of about 3 to 4.
Uh-huh.
So you basically invest that money over a 3 to 4, maybe 5 year period, and then hopefully you will raise your next fund in year 2 or 3. So it replaces that. So virtually all VCs are always fundraising for the next fund.
Mm-hmm.
Most of them have got 2, 3, or 4 funds going at one time, or at least 2. So yeah, that's standard. That's not changed. It's going to be harder for them this year for them to raise than last year,
mm-hmm.
and that's going to have some impact. So that means that they're going to keep their own money. They're going to be more discerning about what they invest. Mm-hmm. They're going to want the valuations to come down a bit. But in the end, it's the key thing about Europe. The final thing is that it's not so much about the valuations. It's about the exits.
Mm-hmm.
And maybe that's what we should be kind of focusing on, is how do we build liquidity and exits into the European market. And there's going to be 3 reasons why you can get an exit within 3 to 5 years. One is that you're building some amazing tech that will be bought by someone who is 18 months behind just to get that tech.
Mm-hmm.
And I would say to anyone, that tech can almost be built virtually anywhere. It needs to be tested and tried out in a market like London. Mm-hmm. And it could be in any sector, although some sectors are getting disrupted a lot quicker than others. 2, it's about capturing a niche.
Mm-hmm. And
you need to do that really fast. Not basically we grow bit by bit, but how you can do that in a 2-year period, 2-3 year period. And the final one is about you become very net cash flow generative. So you can fund growth without stock dilution. And if you do that, then you should be able to IPO if you get to a certain scale.
Mm-hmm.
So it's not about the valuations today, it's what the valuations will be tomorrow. I say to startups, don't give a brass monkeys about your valuation. Just get the amount of money you need to get to the next stage. Mm-hmm. Does that help?
Yeah, definitely. So to conclude, what would be your one word of advice for founders, entrepreneurs?
If they want to come to London, come, kind of hang out, lots of hangout places, meet other advisors. The great thing about London is you will find some community here. From wherever you are in the world, mm-hmm. there'll be another group of your people from your town or your country that is also based here. So you've got a warm welcome, mm-hmm. And I would say that they've come to London because you think it's the market you could scale your business in, less about come to London because you think you can raise your money here. Mm-hmm. And good luck.
Thank you very much, and great insights. Appreciate it.
No problem.